Well, today's investment environment is probably as complicated and challenging as it's ever been for most of the investors we work with today. It's a combination of still needing very high levels of return for most of our clients relative to what the markets themselves seem capable of generating, and also the fact that the investments themselves are much more complicated. They have more moving parts, they're more difficult to measure, and to assemble them into a portfolio that meets those clients' goals and objectives is much harder today than it's ever been in the past. It is much harder for most plan sponsors to meet their objectives, in part because of the nature of governance, which is to say that the frequency of meetings is often not quite enough to be able to take advantage of short-term tactical opportunities that present themselves. But a bigger problem, I think, for many investors is that the complexity of the investment opportunities today is such that it can be very difficult for them to get their arms around and understand how those investment opportunities fit in with their broader goals and objectives. There are many different types of risks for investors to have to worry about. Not only the risk of not getting enough return, but also having individual parts of their portfolio not behave the way that they're expected to. Portfolios can be thought of as a giant jigsaw puzzle, and the key for investors is to make sure that all of the individual pieces fit together and don't inadvertently increase the risk to a certain factor or something that's not desirable. And related to that, a lot of these portfolios are either more opaque or more complex in their own right, so measuring effectively what their risks actually are is more of a challenge than it's been in the past. Probably the most notable is this movement towards allowing consultants to actually implement their best investment ideas. We think this makes a lot of sense because it can make the best and most effective use of our clients, in many cases, limited resources, especially in this cost-constrained age, and allow them to more appropriately focus on things like governance, setting long-term goals and objectives, and the method by which we will achieve those goals and objectives. At the same time, it allows consultants to better utilize their strengths, and in particular to be able to leverage their understanding of the markets. Consultants look at the markets almost every day and are able to understand how the investment managers are able to work within those environments. Outsourcing is the term the industry has adopted. We do not use that term because it really implies that we're here to replace people or take their jobs away, and in fact we're not. What we're really trying to do is to leverage our clients' resources in such a way that we take maximum advantage of what the clients are good at, and we couple that with the abilities that we have on the consulting side, particularly to be able to react to tactical market movements and opportunistic investing. At the end of the day, there can never be a standardized one-size-fits-all solution for our clients. Every client is going to have a very unique set of goals and objectives that they ultimately need to satisfy, and they're going to be influenced by things like liquidity needs, time horizons, and the regulatory environment in which they operate. They're never going to be the same for any two clients. Therefore, the ultimate solution is going to have to be highly customized for those clients. Now, we can, at the end of the day, bring together a set of common tools that help us satisfy those goals. We have any number of different tools that we can bring to bear, and those tools are all largely consistent from client to client to client. But the way that they're utilized and ultimately assembled is going to be very client-driven at the end of the day. Segal Rogerscasey has a very comprehensive set of commingled vehicles that we've put together. It's a total of 27 that represent the best research ideas that come out of our very strong investment manager research team. We have what we call buy-rated managers, which is the very top rating that we can give to a manager where we're very, very confident of their ability to generate good returns going forward. And these commingled vehicles are set up in such a way that we get economies of scale so that as the program grows, the costs go down for everybody who's involved in it. That's a very, very significant advantage because the costs are a big detriment to returns over the long run, and anything that we can do to minimize that makes our clients better off. But we also can get, especially our smaller clients, to be able to invest in these vehicles because we pool our clients' assets together, and therefore we're able to get into some investment manager portfolios that otherwise would not take small client money.